If you're thinking about buying a property with a buy-to-let mortgage, or if you're coming to the end of your fixed rate and need to refinance, then you'll want to hear this. Very few investors seem to be aware of the rates they could potentially be paying on their buy-to-let mortgages in just a few years' time. In this video, I'm continuing my series on what the main lenders are currently offering in the buy-to-let market. So far, we've covered Paragon, Kent Reliance and the Mortgage Works. Today we're looking at Birmingham Midshires, also known as BM Solutions. If you're considering refinancing or taking out a new mortgage, especially if you are coming to the end of a fixed rate period, please stick around because some of these numbers might surprise you. If you'd like to see my other videos, you'll find them on my YouTube channel. But before we go any further, I just need to say this is not financial advice. I'm not a mortgage broker, and I'm certainly not endorsing a particular lender or product, or discouraging you from using any particular lender. If you're looking for tailored advice, you should definitely speak to a professional mortgage broker. And if you don't have one, I'll tell you how you can get in touch with mine later in the video. To keep things consistent across this series of videos, I've looked at a purchase mortgage for a limited company at a loan-to-value, LTV, of up to 75%. Here's what I found. There's a 2-year fixed rate at 4.05%, reverting to 9.34% at the end of the 2 years, as things stand now. And there's a 5-year fixed rate, slightly cheaper at 3.95%, also reverting to 9.34% if rates don't change in the meantime. Or there's a standard variable rate, SVR. On the surface, those fixed rates might seem relatively attractive compared to some of the other lenders we've looked at. But as always, the key issue is what happens after the fixed period ends. A reversionary rate of 9.34% is definitely on the higher side. If you've been used to much lower rates, refinancing at this level could come as a shock, and it raises the same question we've been discussing in this series. How many buy-to-let properties can actually support mortgage payments at these levels? Let's put this into perspective. The reversionary rate here is even higher than we've seen with lenders like Paragon and Kent Reliance. If you're coming off a much lower fixed rate, maybe something around 3% or 4%, moving on to 9.34% will almost certainly seriously impact your cash flow and profitability. Now, one way to manage this could be to take out a 2-year or 5-year fix and hope that rates will have dropped by the time you need to refinance. The big question is, will they? There's a lot of speculation right now. Some say the Bank of England could start cutting rates in 2025, while others believe we might be in for a higher for longer scenario. Truth is, nobody really knows, although my guess, and it is only a guess and certainly not financial advice, is that rates will come down in 2025. But the question is, will they come down enough to make a serious dent in a 9.34% reversionary rate? If rates stay high and you're forced to refinance at 9.34%, the financial impact could be significant. The argument against this is that at the end of the fixed period, you refinance to a lender with cheaper products. But what if lending criteria tighten in the future and refinancing away isn't as easy or as cheap as you hope? What if you get stuck in the expensive reversionary rate and can't refinance away? Or what if you can only refinance away to a product which is almost as expensive? The most important thing right now is to firstly be aware of what is happening in the mortgage market, and then secondly to plan ahead. If you're considering taking out a mortgage with Birmingham Midshires, or any lender for that matter, you need to think about, number 1, your exit strategy. What will you do when your fixed rate ends? Number 2, your cash flow. Can your property sustain higher mortgage payments? Remember, even if rates do come down, the chances are that your new rate will still be higher, even if it's relatively cheap. Number 3, your options. Are there better deals available with other lenders? The problem we all have is that there are so many lenders with so many different products, it's almost impossible to know what's going on unless you are full-time in the mortgage market. This is especially true as products are constantly coming and going, changing, being pulled and being relaunched. This is where a good mortgage broker comes in. A good mortgage broker should know what is available that fits you and which fits with your property. they can help you find the best fit for your situation. So before you buy or refinance, do talk to your mortgage broker. If you don't already have a mortgage broker, I'd be happy to introduce you to mine. Just email me at thepropertyteacher@gmail.com and I'll put you in touch. And if you're enjoying this video, then please don't forget to like, follow and subscribe. And please also come over to my website, thepropertyteacher.co.uk, that's thepropertyteacher.co.uk, where you'll find loads of resources, including free special reports, plus my very popular The Successful Property Investors Strategy Workshop and the Successful Property Renovators Workshop.